Good morning, folks. This is Naim Aslam, Chief Market Analyst at Trade, and welcome to our daily technical analysis video. In today's segment, I'm going to look at gold prices, and the question which every investor and trader is facing is which way gold price is really going to go. What is next for gold prices? Where do we move from here onwards? And that is what exactly we are going to look at. So before we do that, as always, it is important for me to go through this slide of disclaimers and risk warnings. Anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now I'm going to bring out the MT4 platform, and I'm sure all of you guys are aware of this MT4 platform. This can be downloaded from any website, from Avatrade's website as well. And what we're going to look at, obviously, we're going to look at gold. So I'm going to bring out the chart. And to begin with, we're going to look at the daily time frame first. On the daily time frame, we have three different moving averages. First of all, in purple, you have your 50-day moving average, followed by that your 100-day moving average, and then finally your 200-day moving average. Folks, what is quite intriguing with respect to the gold price is right over here, the price action, the constant battle of the price with the 50-day moving average. Remember, the golden rule of moving averages is that if the price trades above that, the moment the price breaks above the moving average, you go in, meaning you take a long position, you buy into that, and the moment the price breaks below that moving average or any particular moving average, you go short, meaning you close your long position and you open your short position. Now, over here, what we're seeing is a constant battle between up and down, up and down, up and down. That is what we have seen for the last few number of days on a daily time frame. But now, for the first time, it appears that the price has actually gone a little bit above that. It has gapped to the upside in terms of that. Now that represents, because there's enormous amount of uncertainty in the actual stock market, traders aren't really sure which way that is going to go, so that has a lot to do over here as well. And of course the US elections, and the list just goes on between geopolitical tensions and so on and so forth. But the main thing which is really driving it is a weaker dollar, because remember, tomorrow we have the FOMC meeting. The expectations are that the Fed is going to remain dovish, meaning the Fed is going to keep the interest rate lower for longer, and that is likely to influence the dollar index negatively. Hence, we are seeing this upward move. So this upward move is primarily because of the weaker dollar, and that is driving this move, but also because of the uncertainty in the equity market. Now the question is, where do we go from here, right? When we look at the price action on a daily time frame, what we see is that the price is trading above all the important moving averages. And what we also see is that as long as the price stays above these important moving averages, the chances are that this trend will continue to the upside. Because since over here, when the price crossed above the 200-day moving average, it crossed it above the 100 and the 200-day moving average, we have been trading to the upside. So that was when the price was trading at 1623. So now that the price has it has few battles, and it formed a double bottom, the first bottom being over here, the second bottom being here, because we're ignoring the price action over here. We're just paying more attention towards the right hand side of the price, and given the fact that we have a double bottom formed here, it is likely that the price is going to continue its journey to the upside. So for me, in terms of a strategy, what I wanted to do is I wanted to put a stop loss behind the 50-day moving average, which is, my friend, nearly about 1951, or perhaps the low of yesterday, which was 1939. But this could be for those investors who just wanted to have a little bit of a more room in terms of a stop losses, and so that they don't get stopped out. But at the same time, I think 50-day moving average represents a pretty good and a decent stop loss, because this continuation of this upward trend is in place now. and we're seeing some sort of an evidence where we have higher lows but not the higher highs. We need to form the higher high. In order for that to happen, we need to break above the high of this candle, and that high is 1966. And if we look at the price as of today, we have already broken the high of that, and that because today's high is 1969, this high was 1966. So the next important price level for me is to break the resistance of this candle right over here, and that high is 1992. So I think it is likely once we clear this resistance pretty much clearly, then we are going to go towards here. Now, in terms of a short-term time frame, in terms of a 4-hour time frame, things are looking a lot more positive because we have gone above the 50, the 100, and now in battle with the 200-day moving average. Again, the moment that we break above this 200-day moving average, it is going to give us a further strength in terms of our gold prices, that this strength is going to continue to move to the upside. All right, folks, that is all. That is all about reading the chart. That is all about reading the price action, eliminating all the lagging indicators like MACD, RSI. I don't pay too much attention to them. I pay more attention to the price because price tells us everything with respect to that. All right, folks, that's all for today, and I'll see you guys next time.